You're a billionaire, a pioneer in the crypto and tech space. You get into what you think is a taxi, but the doors lock, and the driver isn't taking you to your destination. Instead, you are on a terrifying ride with kidnappers demanding a fortune in cryptocurrency. What do? How do you escape? Well, if you're Tim Heath, the founder of crypto ventures like Coinspade and the YOLO Group, you do the unthinkable. You bite your kidnapper's finger. This isn't a scene from a Hollywood blockbuster. This is a true story that exposes the raw, high-stakes reality of the world we've all invested in. Before we unpack this insane story and connect it to the current state of the market, it's essential to get our standard disclaimer out of the way. Please remember that this video is for informational and entertainment purposes only. Nothing I say here should be taken as financial advice. The crypto market is incredibly volatile, and you should always do your own thorough research and consult with a certified financial advisor before making any investment decisions. Your capital is at risk. Alright, let's get back to it. The story comes to us from a courtroom in Estonia, where the details of a meticulously planned, yet ultimately failed, crypto kidnapping plot have been laid bare. Tim Heath, a prominent figure known for his work in online gaming and crypto payments, was the target. In the spring of 2023, a criminal group orchestrated his abduction. They used a fake taxi, a classic move, to lure him in. Once inside, they restrained him and presented their demand as significant, though undisclosed, amount of cryptocurrency. But the kidnappers clearly underestimated their target. Heath didn't just comply, he fought back. In a desperate struggle for his life, he managed to bite one of his captive's fingers, drawing blood and leaving behind crucial DNA evidence. He didn't stop there. He attempted to smash the car window with his head and, in a moment of sheer audacity, managed to throw his shoe out of the window, hoping to attract attention. His resistance was so fierce that the kidnappers, panicked and realizing their plan was falling apart, abandoned their vehicle and fled, leaving Heath behind. Estonian police later used the DNA from the bite mark to track down and arrest the culprits, who have now been sentenced to prison. This story is more than just a shocking headline. It's a powerful metaphor for the entire crypto ecosystem. It shows us that the value we talk about, the digital assets on our screens, has profound real-world consequences. This isn't monopoly money. It's valuable enough for people to risk everything, including their freedom, to try and steal it. This incident underscores the absolute necessity of security, not just digital security like protecting your private keys, but personal security as well. This high-stakes environment is reflected directly in the markets themselves. So, where do we stand right now? The current market sentiment can best be described as cautiously optimistic, or neutral with a bullish long-term bias. After the explosive runs we've seen, the market has entered a period of consolidation. The initial hype from catalysts like the Bitcoin spot ETFs has settled, and we're now in a show-me phase. Investors are watching macroeconomic data, waiting for signals from central banks on interest rates, and gauging the real, sustained flow of institutional capital. There's a palpable tension in the air of feeling that the market is coiling up, preparing for its next major move. The question on everyone's mind is, which way will it break? To get a clearer picture, we have to look at the charts. Let's pull up Bitcoin, the king of crypto and the bellwether for the entire market. Right now, Bitcoin is navigating a critical price range. We're seeing a classic battle between bulls and bears playing out between well-defined support and resistance levels. The previous all-time high is acting as a psychological and technical ceiling. Every time we approach it, sellers step in, taking profits. This is a formidable resistance zone that needs to be decisively broken and held to signal the next leg up. On the downside, we have several layers of strong support. The most immediate support lies around the 50-day moving average, a key short-term trend indicator. A break below this would suggest short-term weakness and could send us down to test the next major support zone, which is clustered around the previous cycle's highs. This area is critically important. A sustained hold above this level would confirm a classic support/resistance flip, a very bullish long-term signal. The 200-day moving average, our long-term trend indicator, is still pointing firmly upwards, suggesting the underlying bull market structure remains intact for now. Looking at indicators like the Relative Strength Index, or RSI, we can see that it's been hovering in neutral territory, moving away from the overbought conditions we saw during the last major rally. This suggests the market has had time to cool off and reset, potentially gathering strength for another push. Volume has been moderate, which is typical for a consolidation phase. We want to see a significant spike in volume to confirm the direction of the next breakout, whether it's up or down. So, what's the forward-looking statement here? Just as Tim Heath had to be resilient and wait for his moment to act. Patience is key for investors right now. The long-term outlook for crypto remains incredibly strong. The institutional dominoes are continuing to fall. Global adoption is growing, and the technological innovation within the space is undeniable. Potential future catalysts include further regulatory clarity in major economies, the approval of more crypto-based financial products like an Ethereum ETF, and a favorable shift in the macroeconomic environment, such as interest rate cuts. However, in the short term, volatility is the name of the game. We could continue to see choppy, sideways price action as the market digests recent gains and waits for a clear directional trigger. This is a time for diligence, not complacency. The story of Tim Heath is a stark reminder that in crypto, fortunes can be sought, made, and lost in the blink of an eye, and the risks can be very, very real. Protect your assets, stay informed, and keep your eyes on those key technical levels. The next major move is coming, and you'll want to be prepared when it does.